You never see this number on a resume, but it decides almost everything that happens after the interview is over. The apartment you get, the car you drive, the interest rate quietly attached to both. Every 20 points you climb costs you less money for the rest of your life, and that gap adds up to a six-figure tax almost nobody explains out loud. This is your life at every level of credit score, from 300 all the way to 850.
Let's start at the bottom. Your score is 380. You're not sure exactly how it got this low. An old hospital bill that went to collections without you ever opening the envelope. A phone plan you defaulted on in college. Maybe nothing dramatic at all, just years of having no credit history whatsoever, which the system treats almost as harshly as having bad credit on purpose. You apply for a basic rewards card. Denied. You try a gas station card, the kind built specifically for people in trouble. Denied. You go looking for an apartment listed at $700 a month. The property manager runs your credit, calls back within the hour, and tells you the unit just got rented to someone else. It didn't. The next building you try requires first month, last month, and an extra $800 deposit specifically because of your score. You hand over $2,200 before you've spent a single night there. You need a car to get to work, so you walk onto a lot that specializes in exactly your situation. They put you in an 8-year-old sedan with 94,000 miles on it. The rate is 21.9% over 6 years. Your payment comes out to $431 a month.
By the time it's paid off, you've handed over $15,500 for a car that was priced at $9,000. $6,500 of that was just interest on a vehicle that's worth less than what you still owe on it. Your auto insurer pulls your credit at renewal, the way most insurers now legally can in most states, and your premium climbs $51 a month without you filing a single claim. No carrier will approve you for a phone plan, so you pay $240 up front for a prepaid device just to have a working number for job applications. Rent is tight one month, so you look into a payday advance, $400 borrowed against your next paycheck. 2 weeks later, you owe $460 back, which works out to an annualized rate north of 300%, a number that would be illegal in half the industries that aren't lending. At $300 to $499, the system doesn't refuse to deal with you. It deals with you constantly, and it prices every single transaction like you're a risk that needs to be paid for in advance. Your score is 642, 14 months without a single late payment. Your secured card graduated into an unsecured one, and the bank handed your $200 deposit back. The first time in this entire process that the system gave you something instead of taking it. You qualify for a real rewards card now. 1.5% cash back, no annual fee, a $500 limit you pay off every month on groceries and gas you are already buying anyway. You start looking at houses, and an FHA loan with a 600 minimum score puts you technically in range. A lender quotes you 7.1% on a 30-year fixed. On a $378,000 loan, that's $2,541 a month in principal and interest alone, plus mortgage insurance on top of that until you build real equity. Over 30 years, you'd pay more than $500,000 in interest on a loan less than $400,000 in size. You decide to wait. The credit union requotes your next car loan at 12.4% instead of 16.8%. On the same size loan, that's nearly $900 less in total interest than it would have cost you 60 points ago. Every 20 points is starting to feel like real money instead of an abstract number on an app. Your score is 705. 2 years of clean history. 3 open accounts, no collections anywhere on the file. Utilization sitting under 15% for over a year straight. You ask your card issuer for a limit increase from $500 to $1,500 without spending a single additional dollar, and your utilization ratio drops so sharply your score climbs 9 points from that one phone call alone. You apply for a mid-tier travel card and get approved. No annual fee, a flat 2% back on every purchase. The first card you've ever owned that pays you instead of charging you just to hold it. A new mortgage quote comes back at 6.1% instead of 7.1% on that same $378,000 loan. That single point drops your monthly payment by roughly $220, and over 30 years, that's close to $80,000 staying in your pocket instead of a bank's. Your auto loan rate this time comes in at 6.9%, the new national average for borrowers right in this range. On a $30,000 car, that's $296 a month instead of the near $400 you were paying at the bottom. The landlord runs your credit on a new apartment and approves you the same day. Standard deposit, no extra months, no phone call to deny you the unit that was somehow still available the whole time. Your score is 761. Lenders have a specific word for you now: Prime. You apply for a premium travel card, approved instantly, a 60,000-point welcome bonus, 3 times points on travel and dining, a $550 annual fee that gets wiped out by built-in travel credits if you use even half of what's included. The math on the card works in your favor instead of against it. Your mortgage quote drops to 5.3% on that same loan amount, $220 cheaper a month than where you started at $560, and well over $100,000 cheaper across 30 years on the exact same house. An auto lender quotes you 5.6% on a new car, putting you within striking distance of the actual best rate on the market instead of the rate built for people the system doesn't trust yet. Pre-approved offers start arriving that you never applied for. You qualify for almost everything now. You're just never quite at the very front of the line. Your score is 822. 11 years on your oldest account. 6 open lines of credit. Utilization sitting at 4%. Not one late payment, ever, on any account in over a decade. The file has nothing left for the system to penalize. A super prime auto lender quotes you 4.7% on a new car, the actual lowest tier publicly advertised, on the same $30,000 loan that cost the version of you at $380 nearly $7,000 more in pure interest. Your mortgage lender calls you, unprompted, to offer a rate reduction you never asked for, because keeping you as a customer is worth more to them than squeezing an extra quarter point out of you. A premium card approves you instantly with airport lounge access attached, the kind of benefit that used to be a building you walked past, now a door that opens because of a number you built one on-time payment at a time. You walk into a dealership with a pre-approval in hand, and the salesman drops the price before negotiations even start because he already knows you have somewhere else to take your business. Your credit score was never measuring how hard you work or how smart you are, or whether the medical bill that started this whole story was even your fault. It tracks one single thing: how reliably you've handled debt, and it silently uses that one data point to set the price of nearly everything you'll ever finance, from the apartment you sleep in, to the car that gets you to work, to the home you eventually try to own. The distance between 380 and 822 isn't talent. It's time, plus consistency, repeated until a math compounds in your favor instead of against it. Every 20 points you climb is a real discount on a real bill, whether or not you ever notice the number moving on an app you barely check. The system was never asking if you deserved a better price. It was only ever asking if you'd proven, on paper, that you could be trusted with one. And that proof was always available to you, one on-time payment at a time, starting whenever you decided to begin.